I'm bringing you another valuable video today. So if you've been looking for a strategy to find a directional bias in Forex and you've clicked the right video, I'm about to reveal to you a super easy way to predict the next move in Forex, in crypto, in stocks, whatever the hell you trade. I'm going to give you step-by-step directions on how to get the directional bias. So let's jump straight into it. Step is to find the institutional order flow on the higher time frames. All right, so right now we're on the monthly time frame, and what we're trying to do is just really frame a profile. Okay, and so what we can see is just on the monthly time frame, this is all the data we need because we are on the higher time frame. As you can see, we're all the way back to December 2014, but currently we are in the month of July of 2021. So right now we can see that price, we're just looking at the order flow, okay? We see that price, we're looking at the swing points. So we see price was up here back in January 2015. Price came down, it had that swing high, then made a swing low in November of 2016. And what it does, it comes back, pretty much consolidates, it descends back down, takes out that swing low from November 2016, and then it shoots back up. All right, so if I'm looking at this, I'm looking at on the monthly time frame, we have been pretty much just in a range bound market. Okay, so we've just been ranging, ping ponging, but we have within that range, we are currently on the upside. Okay, now what I do see here is that we have equal highs that we can continue to blast through and possibly get up to this bearish order block on the monthly time frame. But that's looking out into the future, so you can frame that and you can map that out on your charts. But let's go down into the weekly time frame. Okay, so we can see here, we can get a better idea. So if we're just looking at this long, if we're just looking at this strong leg, we can see that price is just strongly just trending bullish. Okay, we have a retracement, we went higher, and then we're having this other retracement. And my eyes typically go directly here, knowing that on the monthly time frame we have an idea that we can continue to go higher to attack those equal highs on the monthly time frame. My eyes go here to where, okay, I see a bullish order block. Okay, so if price wants to retrace down into this bullish order block to continue upwards, that's a possibility. All right, that's a possibility. So I'm framing this. I'm not coming up with a specific directional bias yet. I'm just framing on what could be. And this is based off the higher time frame. So now when I come to the daily chart, all right, what I'm looking for is the swing points. Okay, I'm looking for the swing highs and the swing lows. All right, the daily time frame. Step 2 is going to be to find the most recent swing highs and swing low points. All right, now that we have our monthly and weekly profiles already defined, we can kind of refine it even more so on the daily time frame. Okay, so we can get a little bit more accurate idea of where price is most likely to draw to next. So my eyes go right here. So we know we've been bullish on the weekly and the monthly, right? But when we're looking at, so when we're trying to frame an idea, we're looking at the swing high and the swing low. So my eyes go here, right? So the swing high here, you have this high, and then you have a lower high to the right, a lower high to the left, all right? So this delineates that we are going bearish, right? So this tells me that we are going bearish, and I can anticipate. I'm not expecting anything. I never expect anything in the marketplace. But we can anticipate once this candle closes, right, and it breaks that previous daily low, this swing high is valid, right? So now my eyes are trained to look at the previous daily low if we are going to go bearish. Now, so yes, we have been bullish, right? But just because we're bullish on the higher time frames, I want to say this right now, because you're bullish on the monthly, the weekly, even the daily, you can still find a bias that is bearish on a lower time frame. You can still frame a trade based off of that. So, and then we'll kind of dive into that a little bit more. But to stay on the topic, let's look at this candle that shoots down. It breaks that previous daily low, right? So now price is just going bearish. It was bearish. It has that retracement. It has another swing high, you should say, and because you have that lower high, you have that high here, and then you got another lower high to the right. So price is continuing on the down move. Where price is is looking to draw to, right? It's just attacking every time. It's just going and attacking liquidity here. It's going to attack sell side liquidity. My eyes, once I see this retracement and I see this candle go here, my eyes go here to this most recent swing low, right? And so this is another swing low. So you have, you know, price moving up. You have that swing low here. You have that swing high. My eyes go here to take out this most recent swing low. All right. So what happens is price drives through and it creates another swing low to go up and take out that previous swing high. All right. So that was a lot, but it's really just simple. Okay. You just look at these swing points just to form an idea, and based off where you are in the day, you can kind of formulate, okay, this is the next draw to liquidity, or this is where we can predict where price is most logical to move to. All right. So you're just trying to make logical ideas, or frame logical ideas of what price is most likely to move to. So swing highs, swing lows, and typically on these daily time frames, when you are, this is a trending profile. So we know that these moves here, these are retracement legs, right? But they're 250 pip retracement legs within a month, so within 18 days, right? So we typically have 20 trading days in a month. So yes, so on those higher time frames, you saw that we have been pretty bullish, but through those big bullish candles, you're having these retracement legs. So that's why on a daily time frame, you can be bearish in a bullish market, and you can be bullish in a bearish market, if that makes sense, right? You're just looking at the most recent swing points, swing highs and swing lows. So here you can see that we have that swing low form, and then it goes up, right? It takes out this swing, that swing high there, right? It takes out this swing high. What's resting above here? Buy side liquidity, right? This is buy side liquidity here. So it takes that out, right? So now that you know this is buy side liquidity, it takes this out, and then it goes up, and you're just looking for the next swing point, right? So the next swing point here is happening like right around this area. All right, you got that high, you got the low. It's not a pretty one, but this is a swing point. This is a swing point right there. So you have that swing high here, right? The price goes down. So your eyes go to these previous lows, right? You have all these lows here. You have all this sell side liquidity. What does price do? Price trades through that, all right? Price trades through that swing low, and it even trades through this liquidity here, which is also, what is that? Oh man, that is a swing low, right? That's a swing low that it trades through. It purges it and it comes back up. It makes another swing point. So start recognizing these swing points. So now that we identified the most recent swing points, and we know what the swing highs and swing lows are, right? So for instance, right, we had that swing high to this swing low, right? It took out this, it took out that swing low, it took out that sell side liquidity, it purged it, price came up, right? So this is what we know. We create that narrative, right? Where is price most likely to draw to next? All right, where is price most likely to draw to next? And this is borderline weekly analysis for you. So we know that we took out this previous high. So now my eyes go here. This is the next draw on liquidity, right? Most likely. So we'll draw that out for the week to come. We'll look at these relative equal highs. It's also another draw on liquidity. And then we have that most recent swing high that we could reach up to. And then we also have equal highs on the weekly chart. But we're just trying to look for intermediate ways where price can most likely draw up to. This is super simple, super easy, nothing crazy about it. We know, because once we've identified these swing low points, and we know, and you have these like little mini swing, like you have these two key, swing points, but then you have these little mini swing points in between. So you have that swing high here, right, which is just that retracement leg. Then you had that swing low, right? So now we can just anticipate price to continue to move upwards, right? And look at these next draws on liquidity. So step 3, you're gonna look at this and frame a trade idea. Okay, you're gonna frame a trade idea. So if we are to continue bullish, right, you're just going to now wait for the market to open, and you're going to get on these lower time frames and wait for that pullback. And then you can use order blocks, breaker blocks, retracements, fib retracements, whatever your entry method is. But this is just a way to see, to I guess, take away the whole confusion. I know when I first started trading, my whole thing was, okay, where if I only knew where price is most likely to go to, or what the directional bias is. But nobody really understands directional bias in the sense that it's really just all about, it's not about a time frame, it's all about price. Price is fractal. Keep that in mind. We're always looking, or the algorithm is always looking to reprice. Okay, it's always looking to reprice. Even on this lower time frame, even though I know I have this buy side liquidity to draw up to, we also have this sell side liquidity to draw to. Okay, we have these lows that we can draw to. All right, we have these swing points, or these on these lower time frames that we also can draw to. So this is when you have to wait patiently and see where price will want to potentially like go off onto. So if we know that, like, on this lower time frame, right? So just a little nugget here. We had that key swing high. We have this key swing low. My eyes immediately go to these 2 points, right, on the hour time frame, right? So yes, we have a bullish sentiment, or we have a bullish profile on the daily chart, okay? But if I'm looking at that, I'm thinking like most likely to where price will draw to next. If I am a day trader, this is why you must know what your personality type is. Are you a position trader? Are you a swing trader? Are you just a day trader, right? And you're just looking to capitalize. Now, you can actually play both sides of the market, right? You can be fluid in that way. So if you look at, this swing low, and I'm going to color it red. So you got this swing low here. Yeah, that swing low, and then we'll color this one red as well. This would be the swing high. So we got that swing high from this swing low. So we have this dealing range, right? Give you a quick tip and trick, secret. All right, you run your fibs from that swing high to this swing low. You want to find equilibrium in price. You want to find equilibrium. This is getting a little surgical right now. All right, this is getting just a tad bit surgical. All right, so now we have equilibrium. So we look at this in terms of quadrants, right? We're trying to get algorithmic in our in our way of looking at price. So in the top half, we know that price is reaching up. It has a potential. We're looking at price is it's priced at a premium price, right? Anything below is going to be priced at a discount. And simple supply and demand, simple just basic economics, man. You want to buy low, you want to sell high, right? So yes, right. We know on the daily time frame we can draw up to this most recent swing high on the daily chart and continue to target those highs and that buy side liquidity. We know this, right? But we also know that these two swing points, right? We know that price is currently priced at a premium. So when we're priced at a premium, we'd be looking to short the market. When we're at a discount, we'd be looking to buy the market. So it's all about positioning yourself in the marketplace, okay? You want to position yourself in the right way. So yes, we are long from a higher time frame perspective, right? But when we come down to this lower time frame where price is currently at, we know that it's in a position to where it's priced at a premium. So we would be looking, if we're going to look to buy, we want to buy below this equilibrium, right? We want to buy the midpoint between that swing high and this swing low. This is the area that this is our buy zone, right? Okay, so this is our buy zone, okay? And I'm gonna shade it green, and I'm gonna call it our buy zone. All right. This is our buy zone. Okay, not in terms of zones that you've been taught, like support and resistance zones and shit like that. And this, conversely, is going to be our sell zone. All right. So you want to think of it in terms of that, right? So I do want to buy based off of the daily time frame. I know we can reach up for those previous highs, right? It's showing me that we had a most recent swing high. We know on the monthly, weekly, it's all aligned that we are bullish, okay, for the time being, okay? So we know that. So you kind of, now you're getting surgical. Now you're like, okay, where are we currently in price? And where's price most likely to draw to next? Right? Now, price can continue to just bust up or whatever, but I want to wait patiently for price to come into this area below that midpoint, below equilibrium, into this buy zone. I honestly would like to see it take out the sell side liquidity because we have all this buying pressure. We have all of this buying pressure over the last couple of days. The algorithm has to reset. It has to reset. And so now what I'm looking at is a market maker sell model, right? Anytime I see price aggressively, repricing up into a premium, my thought process is immediately, okay, we're going to sell off. Now I can keep a bias, right? And I can just wait, or I can, look to go short to take out this sell side liquidity here and then get out, once we come into this area, right? Then to go long. You can play both sides like that, or you can be patient and just let it play out, let price play out, let it take out this sell side liquidity, and just prepare yourself to get in and, find an entry point that way. But in a nutshell, man, I just really wanted to just, really declutter everything and really just break down how you find where price is most likely to go to next, how to predict the next area in the most logical sense that you can, from that higher time frame, and then framing it all the way down to a lower time frame and see where you are at price, whether you're at a discount or whether you're at a premium. And so I hope this was super helpful, man. If it was, make sure you let me know in the comment section below. Let me know that you subscribe. Make sure you comment that you subscribe, because when you do that, I'm gonna do a funding talent giveaway at some point. I don't know when, I don't know how, but just make sure it's gonna be based off of everyone commenting in the comment section. So make sure you put a comment below that you've subscribed, like the channel, share the channel, and make sure you catch the live streams every Monday through Friday during the New York session. So we'll keep in touch, man, and have a good weekend whenever you're watching this, and we'll talk soon.